So family, I have had issues when it comes to identifying the differences between support and resistance, key levels, supply and demand, whatever else that's out there. And family, I have now figured out 3 ways that key levels are created. And I want to show you how you can find it and identify it too. What's going on YouTube? This your boy Chart Slayer here, and today I'm gonna be breaking down how to identify key levels in the market. I promise you it's not as hard as you think. It's just a matter of training your eye to see it every single time you approach the chart. So let's go ahead and break down certain things, right? What is support and resistance? What is the difference between support and resistance and supply and demand? Because what I do is I trade off supply and demand zones, which is the zones where banks are moving. All right, so you want to go ahead and trade where the banks. Our job as retail traders are to follow the banks. That's our job, and to profit when they're profiting. Okay, so support and resistance are lower time frame levels, right? So our lower time frames in general. So for example, the 1 hour, 30 minute, 15 minute, 5 minute, 3 minute, 1 minute, those are your lower time frame support and resistance levels, family. Now, the higher time frames are your supply and demand levels, right? So those are your 4 hour, daily, weekly, and monthly. Those are the levels where banks usually pay attention to and bounce or break and retest to the next level. Right, and those are the times where you want to specifically pay attention, because what happens is you'll take a trade, get faked out, and then wonder why you got faked out. You got faked out because that's a key level, and you need to understand when at key levels things happen, reactions happen that you have to pay attention to. So let's talk about the 3 different ways that key levels are created. 1 are trending. These are the key levels that you get breaks and retests. You know price, you got to really find out where it sticks out, right? So trending is where you have price sticking out. Then you have reversals, right? Reversals are where you have to be extremely picky when it comes to entries. And then you have range bound, right? Range bound is really the ones that are the easiest ways to identify, because you're just identifying support and resistance, which is kind of like a box identifying a square, whatever you want to call it. Those are the easiest ones. So I don't want to talk about it any further. I want to go ahead and show you visual, so you can visually see it on the charts. All right, family. So let's go ahead and break down, the difference between lower time frame and higher time frame support and resistance levels. All right. So first, this is a higher time frame support and resistance because I have identified this level on the daily time frame. As you can tell, if we were to break down this specific level, any pullback on the daily time frame is a specific supply and demand level. All of these levels are supply and demand levels, and you have to understand the difference. Every single one of these are supply and demand levels. These are areas that you want to pay attention to in the market. Now, obviously, these specific levels, you want to pay attention to the amount of touches, right? So obviously we wouldn't be trading off this touch because we have this touch here that has 3 touches in there, right? So repeat, right? We wouldn't buy off this level because we have a level here that has 3. This only has 1 touch. So usually with 1 touch, price is going to ignore it because there's not much of a support there, or not much of a resistance there. But if we have a level where it has 3 touches, there is a support there. There's more touches. The more touches it has, the stronger the level, right? So here, price has come down to this level, and now it has created 2 touches. Now, and not only did it create 2 touches, it has bounced down and came right back up, meaning that there is a reaction off of that level. This level is something important. So this is something that you want to pay attention to. It can't just be a level that just gets broken through and then comes right down to the next level. That's not a good level to pay attention to. You want to pay attention to the levels that have reactions. Okay, so this is, like I said, going back, the difference between higher time frame and lower time frame is the reactions at certain levels and the moves that it happens at certain levels. So because it touched this level twice, we had a huge buy. Because it touched this level 3 times, we had a huge buy, right? When it came to this level, we didn't get really about it. We got to move up, and then we came right back down to that level, and it shot up, right? And I want you to understand that it's going to react off levels that have major reactions. So pretty much, because this level went into a buy, we're expecting this to go into a buy. Because this level went into a buy, we're expecting this level to go into a buy, and this level to go into a buy, and keep going. So if when this came down to this level, obviously 1 2 3 breakout, or 1 2 breakout, meaning that you have 1 touch, 2 touch, 3 touch, and usually anything 3 or more, you will get a breakout, which you did. Off the 4th touch, you got a breakout off of, right? So you really want to you really want to understand the market as a whole. Now, let's talk about, you know, the difference when it comes to lower time frame and higher time frame. So we just talked about the higher time frame, which is the higher time frame, the 4-hour, daily, weekly, and monthly. Now, if we were to go to the 15-minute, there are levels all over the place, right? You have here, you have here, 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 here. Now, I want you to understand, price is going to break through these levels because these levels are not as significant as a higher time frame. Higher time frame is your best friend. You know how your trend is your best friend? Higher time frame is also your best friend. Look at how price has completely broken through every single level here, right? Price broke, retest, right? And it broke, then it broke, then it broke, then it came back down and then broke, right? Not only did it break, it retested this level all across. Now, once you understand that it's a lot simpler, it's not as simple as you think when it comes to break and retest, but when you understand lower time frame support and resistance levels aren't as significant because levels aren't reacted as heavily. Okay, higher time frames are the levels that are reacted way more than the lower time frames. So that's the difference between a higher time frame and a lower time frame. Now let's talk about actually identifying key levels, right? Let's really talk about actually identifying key levels. Now let's talk about the first part, the first way that key levels are created. And the first way that key levels are created are within trending markets. Now, like I said, I like to identify my levels no lower than the 4 hour. So 4 hour, daily, weekly, monthly are the only time frames I'm actually drawing my supply and demand, aka support and resistance levels, right? So what are my peaks and valleys in a trending market? So you have here, you have here, you have here, you have here, and then you have here, right? These are the areas that you want to pay attention to when it comes to trading, right? If we're looking for a buy, we know that we could potentially have a reaction here. We could have a reaction here, 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 and here. That's the reason why you want to pay attention to these levels. Now, are you drawing every single one of these levels? No. You only draw what's relevant to current price. So what's current price right now? Here. So what's the relevant or recent peak that you have? Here. So this is the only level that I would literally draw, right? Or here, right? These are the only areas that I would pay attention to because of the fact of they're the ones that are closest to current price. Current price is the last right candle, right? So this is the last right candle. If I zoom in, this candle right here, this candle is current price, right? So what would you want to expect off of this? You would want price to come up here, retest, and then you would look to buy. Come down here, retest, and then you look to sell. And it's as simple as that, right? If you can understand where retests are, where price sticks out, where the peaks and valleys are in a trending market, it'll make things a whole lot smoother for you because you're not out here drawing lines all over the place, right? And then a cluttered chart is a cluttered mind. A cluttered mind means you're not making any money. That's just the facts, right? So let's talk about the other way, reversal, which I kind of already broke down in the higher time frame. If we look at this level here and we look at this level here, we're anticipating or predicting or wanting to happen. Nothing is for sure, but we're wanting a reversal to happen at these levels. Because price bought here, we're expecting a reversal here. We're expecting a reversal here. And even when price came here, We were expecting a reversal here. Does it have to do it? No. As you can see, price came back down to this level, and now we're getting a reaction off this level here, right? Because price took off there. That's how you identify the reversal aspect. It's very simple, right? Trending, you're just looking for peaks and valleys. Reversals, you're looking for certain touches in the market, right? And identifying what happened when it touched those levels, right? The last thing is a range bound market, right? And a range bound market is very easy. You're just looking for areas that price touched multiple times, right? This is a range bound market, meaning that price came to this level and bounced multiple times. So as you can tell, these areas here, the areas here are your areas to sell. These areas here are your areas to buy, because you're looking for those specific touches. Right now, if price continues to break down, then boom, you just wait for that break and retest before actually selling the market. It's that simple. And then you look at it at the next level. Boom, we have a level here. So now we're just watching to see, okay, what will happen at this level? Right? Are we going to get a complete push up? Right? In order for me to actually buy this, I want price to come up here, retest, and then buy. And then my TP would be here. And then if we get the same thing here, break and retest, then boom, my TP would be here. It'd be that simple, right? But the thing is, your emotions are involved when you're taking these trades. Only thing you need to be focused on is the level at hand and if you're managing your trade appropriately. Everything after clicking a button is psychological, right? Technicals is very easy. Most people know how to trade, but they don't know how to manage their emotions. So I want you to understand, if you can understand this, the reason why most people don't even know how to manage their emotions is because they don't know what they're doing in the market. Right? So if you can understand what you're doing in the market, it'll help you manage your emotions better, which will make you last in trades longer, which will help you become a better trader, and the consistency will bloom. Right? So hopefully you guys had a full understanding on how exactly to identify key levels in the market. So family, hopefully you guys have a way better understanding and you're able to apply what I just taught you on how to identify key levels and the 3 ways on how I was able to identify the key levels in the market. Hopefully, I'm telling you, this will work if you apply it and literally go through the principles that I taught you. So like, subscribe below. Let me know in the comments if you enjoyed this video and you had an aha moment or a light bulb moment. I'm really interested and I want to have a conversation with you guys in the comments. And I appreciate you guys, and I will see you guys in the next video. Peace out.